Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Now, yes, it's bad. Are you in the 59%? What am I talking about? Well, we'll talk about that in just a moment. But first, I want to turn your attention to this article right here from the Substack. This appeared yesterday at brittgillette.substack.com. It's pinned at the top. It's titled, How the Current Global Financial Crisis Leads to Biblical Tyranny. And it's a step-by-step guide that describes how we go from the system we're in, the current crisis we're in right now, to the mark of the beast system, and the path I believe that will take the interim steps in between where we are now and where we will be. Well, not maybe we will be, but where the world will be when the tribulation takes place and the mark of the beast system rolls out at the midpoint of that tribulation. So make sure to check that out. It fits perfectly with what we're going to talk about today. So we'll revisit this toward the end of the video. But in the meantime, are you in the 59%? Now, what am I talking about? I'm talking about this right here. So this is from CNBC. It says 59% of Americans wrongly think the U.S. is in a recession, report finds. And I have much to say about this mainstream news media article, this legacy media article. First off, reporters should be reporting the news. And when you report the news, you don't put descriptive words like this in there, right? You don't insert opinion into it, but that's what they say. They say, if you think we're in a recession, if you're in that 59%, well, you're wrong. You're absolutely wrong. It says, citing higher cost and difficulty making ends meet, 3 in 5 Americans falsely believe that the U.S. is currently in a recession, according to a report. Economists have wrestled with the growing disconnect between, so you're disconnected, you have false beliefs, and you're wrong, right? All before we even get to the first paragraph. The growing disconnect between how well the economy is doing, it's doing fantastic, and how people feel about their financial standing. So it's about how you feel, right? You're just feeling a certain way. It's not reality. Wake up, right? Some say we're in a vibe session. So it's all about feelings. It's not reality, right? It says the U.S. economy has remained remarkably strong, even amid persistent inflation and high interest rates. And yet, 59% of Americans falsely believe that the U.S. is currently in a recession, according to a recent survey of 2,000 adults by a firm in June. Well, let's take our own survey right here. Leave your opinion in the comments below. Are we in a recession? Are we in a depression? Or is everything just fine and wonderful? And know that you may be perceived as wrongly and falsely not getting it. You just don't get it. That's what they're trying to tell us. Clearly, it states, we are not in a recession. Right now, we have a Goldilocks economy, said Gene Goldman, chief investment officer at Cetera Financial Group in California. The country's economy has continued to expand since the COVID-19 pandemic, sidestepping earlier recession forecasts. And of course, what do I always say? These types of articles, they're clearly captured by the permanent bureaucracy in Washington, D.C. It's an election year. What do you mean it's a recession? Oh, no, everything's fine. What do I always say? Go to the end of the article, because they bury the lead at the end. They put the propaganda at the front, and then they put the real news at the end, right? Because that's how they get their propaganda out there. And then they can say later, well, we had an article that said this, and they know that, out of every person that reads the headline, 80% might read one of the subheadlines. 80% of that will read the first sentence. And by the time you get to the end, maybe 1 in 1,000 people still reading. That's why you should always cut to the end. It says here, it's not only a vibe, however. well, why'd you spend an entire story telling us that it was? but now you're telling us, oh no, it's not just a vibe. As more consumers stretch to cover increased prices and higher interest rates, there are new indications of financial strain. A growing number of borrowers are falling behind on their monthly credit card payments. Over the last year, roughly 9.1% of credit card balances transitioned into delinquency, the New York Fed reported for the second quarter of 2024. And more middle-income households anticipate struggling with debt payments in the coming months. So at the end, they just say, totally disregard everything we said before this. If you're still reading, which we are. But guys, what is really happening out there? Let's put the propaganda aside, look at the facts. What's really going on out there? Well, what's going on out there is that it is bad. And we'll look at how bad, and then we'll look at where's all this going next? Where's this headed? So let's start with this right here. This is from Zero Hedge. This is from a little over a week ago. It says, on verge of credit shock, credit card debt posts biggest drop since COVID crash as rates hit a record high. And you might say, well, that's a good thing that credit card debt is going down. But it's a sign of a struggling economy. It means that people have hit their debt limit and they can't take on any more, and so they don't. And that usually is a sign that we're heading into a huge downturn. So we come down here to this part of the article. It says total credit card debt is at an all-time high, while the personal savings rate is at a record low. And they have this chart here. Let's take a bigger look. So as you can see here, this data goes back almost a decade. And the personal savings rate is right here in green. And it's maybe was slightly lower back in 2022 for a month. But for the most part, it's at a decade low. But look at credit card debt. That is at an all-time high. So, but you falsely think that things aren't great, right? Things are great. How about this from Mike Shedlock's blog? Signs of severe credit card and auto loan stress in Generation Z. And we scroll down and look at some of the charts he has in here. Here we have transition into serious delinquency. So this is for auto loans that are 90 days or more delinquent. And we see that rising for all age groups, but in particular, the 18 to 29-year-old group in blue and the 30 to 39-year-old group in red are now at levels last seen during the Great Financial Crisis. But if you think we're in a recession, you're wrongly, according to the headline in the CNBC article, you wrongly think we're in a recession. How about this? Transition into serious delinquency, again, 90 or more days late in making a payment for credit cards by age, the same age cohorts. Again, it's going up for all age groups, but 18 to 29 and 30 to 39-year-olds, that was last seen, these levels last seen during the depths of the Great Financial Crisis. How about this from Jesse Felder? Chapter 11 filings, bankruptcy filings, reach highest level in more than a decade. So we have to go to the end of the Great Financial Crisis to see Chapter 11 filings as high as they are right now. How about this headline? This is from Game of Trades. It says, warning, temporary help requirement is collapsing. This typically happens before sharp economic downturns. Buckle up. And this shows temp employment trending downward. The last time it trended downward was when we went into the COVID shutdown recession. Before that, the last time it trended downward was the Great Financial Crisis. Before that, it was the dot-com bubble recession that took place after the dot-com bubble collapsed. About this, ISM PMI employment. So this is the Institute for Supply Management Purchasing Managers Index of Employment, and it had a 43.4 reading. Anything below 50 is considered contraction. It says the only time lower, the internet bubble popping, the Great Financial Crisis, and COVID-19. So we see it here. It hasn't hit the depths of COVID and the Great Financial Crisis, but the only time lower would be this recession, and this recession. Well, how about some government numbers here from the Federal Reserve Bank of St. Louis? This is current general business conditions, diffusion index for New York. We see here, this has been in contraction all year. And the only other times that it's been contracting have been the COVID shutdown. Briefly in 2016, we had a downturn. Looked like it was going to happen. But for these many number of months, you're looking at recessionary conditions. How about this from the Federal Reserve Bank of St. Louis? Real median household income in the United States. That means the purchasing power of your income. If you get a 2% raise, but there's 5% inflation, you didn't really get a raise. You're able to purchase less. Your income has less purchasing power. And in reality, most people, if they get a raise at all, well, they're facing 20, 30% inflation and a whole host of different things. But here we see 3 consecutive years of decline in real median household income. The last time we saw that happen was during the Great Financial Crisis. Before that was the dot-com, post-dot-com bubble bursting and that recession. Prior to that was the early 1990 recession following the savings and loan crisis. So again, the data indicates, well, you're not wrong if you're in the 59%. That's what the data is telling us. Let's take a look at this right here. Had another chart, it had a problem. It wouldn't show up, so I had to pull this one up, and it shows the S&P 500. But what we're looking at here that I want to focus on is this blue line. So this is the copper-gold ratio, which can be a good indicator of the health of the economy. The lower it is, the worse the economic conditions are expected to be. The higher it is, the better those conditions are expected to be. And the reason is, when the economy is doing well, there's high demand for copper, because copper is found in all sorts of things, all sorts of goods that are created. Goes into new buildings and cars and all sorts of different things that the economy would produce. Whereas when the economy goes in contraction, you see less demand for copper and the price drops. Likewise, when things are going well, gold prices sort of level off. Gold isn't in huge demand, but when there's a crisis, maybe you expect a run on banks, gold prices go up. And so the ratio between copper and gold is a decent indicator of the health of the economy. And right now we see it at a low. The recent low that was lower than that was the depths of the pandemic shutdown. Prior to that, again, that lull in 2016. And then you had to go back to the Great Financial Crisis. How about headlines like this from Zero Hedge? Wayfair execs warn home goods slowdown mirrors the 2008 Great Financial Crisis. It says, highlighting comments from Wayfair CEO Niraj Shah, an earnings press release on Thursday stated, customers remain cautious in their spending on the home, and our credit card data suggests that the category correction now mirrors the magnitude of the peak to trough decline the home furnishing space experienced during the great financial crisis. Wayfair CFO warned, we see declines that are similar to the declines that we saw in 2008 to 2010 period. And I think what that speaks to is that the category's been going through a massive correction, a correction that we've previously only seen during a recession. Well, how about this from Armstrong Economics? Car repossessions rise 23% year over year. We cut down toward the bottom of this and we read, Cox Automotive believes the trend of repossessing cars will increase into 2025 when they anticipate 1.7 million cars being repossessed. As of the first quarter of this year, U.S. household debt stood at $1.77 trillion, $12.44 trillion. Well, I don't know how they add this up. Maybe they meant 1 quadrillion. How could you have 1.77 trillion in debt and then say, well, they have 12 trillion in mortgage debt? Maybe they mean, I don't know how they're getting this figure. 12.4 trillion in mortgage debt, 1.6 trillion in autos, 1.12 trillion in credit card debt, and 543 billion in other forms. Well, I add those up and I get 15 trillion, not 1.77. So I don't know where they're getting that figure from. But it says Bank of America, Citigroup, Goldman Sachs, and others recently reported a stunning $4.1 billion loss in unrecoverable debt. So, guys, that's hitting the banks, but that's not the only hit in the consumer space that the banks are taking. We've talked about this before, but how about this? This is the delinquency rate. This time, not for credit cards, not for auto loans, but for office commercial mortgage-backed security loans. So we've talked about commercial real estate and the problems it's facing. Look at this dramatic increase in the delinquency rate for those loans. This is from the Contrarian Desk on Twitter. They write the delinquency rate on office commercial mortgage-backed security loans spiked to 8.11% in July this year and almost quadrupled in the last 18 months. We're getting closer to worrying levels, especially considering the pace of the increase. With such rate of delinquencies, which bank is going under? And I would change that to say, to be more accurate, to say which banks are going under. Because we've covered this before. Let's go back to June. And this research from Florida Atlantic University on bank exposure to commercial real estate. There we read, Cole calculates each bank's total commercial real estate exposure as a percentage of the bank's total equity. So how much exposure to commercial real estate do you have versus what is your bank worth? Right? That's what they're asking here. And what they're saying is any ratio over 300% as excess exposure to commercial real estate puts the bank at greater risk of failure. So that means you could have loans on commercial real estate that are 4 times what your entire bank is worth. Now, all of those loans aren't going to go bad, but it doesn't take a large percentage for them to go bad to wipe out the bank. And they're saying 300% is a critical sign that they feel puts the bank at greater risk of failure. But here we read, among banks of any size, And they say toward the top of the article, 67 large banks. Some of the largest banks in the country are over 300%. But 1,871 have total commercial real estate exposures greater than 300%. Of those, 1,112 are greater than 400%. Of those, 551 are greater than 500%, and 243 banks have commercial real estate exposures greater than 600%, twice as bad as what bank regulators think puts the bank at greater risk of failure. So we have commercial real estate crisis where we see this happening. That alone could wipe out all of these banks. But we also have rising credit card delinquencies, rising auto loan delinquencies. What happens when we see mass layoffs? We're starting to see more and more of that. Lots of companies trimming their workforce 7%, 15%. And all of those add up to a lot of unemployed people who then can't meet their mortgage payments, their auto payments, their credit card payments. And then the banks are under that strain. So let's go back to this headline. 59% of Americans wrongly think the U.S. is in a recession. And I would say, you know what? I agree with this headline because it's wrong. If 59% of Americans think we're in a recession, yes, they are wrong. This should read depression, or they should change report finds to parentheses, we're really in a depression. Then it would be accurate, right? But guys, this is bad stuff. Where is this all going? What happens next? Well, again, head on over to the Substack at brittgillette.substack.com and check out this article, How the Current Global Financial Crisis Leads to Biblical Tyranny. When the system breaks, they'll have the solution conveniently waiting in the wings. Guys, I think this is one of the most important articles I've put out in quite some time. It's definitely one of the longer and more researched articles that I've done, but again, we are in the midst of a financial crisis right now. That's why I say the current global financial crisis. The media took a step back a week and a half ago. Oh, the sky's falling, Japan's stock market's crashing, and then the market turned back up and they went, oh, okay, everything's fine now. Everything's great. 59% of Americans are wrong to think we're in a recession. Everything's wonderful. But guys, the crisis may have left the headlines, but it has not left. And this article will tell you why. We talk about why this crisis hasn't gone away. Go read this and you'll find out, and you'll understand that we're only in the beginning, and this is going to play out step by step with continued volatility, debt hitting its limits. Again, we're seeing that with credit card debt, huge declines in credit card debt, not because people are paying it off, but because they've hit their limit and can't take on any more. We're going to see bank runs in our future. We're going to see a bank bail-in. And if you don't know what that is, you need to go read this article, because one is in the future, and I believe that will be a historic event that many people will remember for whatever time we have left on this earth, because it's going to shake things up so much, blow up a whole bunch of things, the entire financial system, put us in a bank holiday. And again, if you don't know what a bank holiday is, the last one happened during the Great Depression. Go and find out what that is. And then from there, they will roll out this new system. And you need to know what that system entails and what comes next, because that will set up and establish the system that I believe ultimately will be the one co-opted by the Antichrist and the false prophet during the tribulation period. So Guys, the reason we talk about all this is because it ties directly into end times prophecies highlighted in the Bible, featured in the Bible, that tell us when we see these things, this is a sign of the times in which we live and how close we are to the return of Jesus Christ. So guys, head over to the Substack at brittgillette.substack.com. One thing that I've noticed is, especially when I talk about the Federal Reserve, financial markets, and shine light on these things that the mainstream media doesn't want to talk about, I get buried on YouTube. I can see it in the stats. Whenever I put out one of these types of videos, the visibility goes away. So if you want to make sure that you see these things when they come out, sign up at the Substack. Just go there. It's free. Put in your email address. You'll get email notifications of all of these videos like this, as well as the article that we just looked at, so that you won't miss those things. Make sure to hit the subscribe button on whatever platform you're on so that you don't miss these. It's important to build this direct connection that big tech cannot sever, because if you're relying on YouTube or some other platform to notify you that these videos come out, I can assure you the most important videos, they're going to make them invisible to you, if not just take them off the platform altogether. And eventually, I'm sure that's what's coming. So guys, make sure to go to Substack and sign up there. Make sure to hit the like, share, subscribe, restack buttons. All of that gets this video and others out to more people so that they can hear what's happening and hear about the hope we have in Jesus Christ. So again, leave your comments below. Are you in the 59%? I'm in the 59%, or the subcomponent of that 59% that says we're in a depression right now. And who knows that the media will ever admit to that. My guess is if Donald Trump wins the election, they'll acknowledge the depression the following day, or on Inauguration Day. That's my best guess. But if he doesn't, well, then they'll probably never acknowledge it. We'll all be scouring dumpsters for our meals, and they'll tell us that it's a booming economy. But guys, it is bad out there, so let me know what you think. Leave your comments below. Make sure to hit the like, share, and subscribe buttons. And God willing, I will see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.